Good afternoon, everyone. I'm Sulakshana, host for this webinar on behalf of Wadhwani Foundation National Entrepreneurship Network. As we begin the session, I'd like to take you through the phenomenal job that WFNEN is doing in supporting startups, early stage and growth stage entrepreneurs, and SMEs to grow their business. They provide a great free mentoring and learning platform to those who come and register at wfnen.org and connect them to experienced and expert mentors and investor connects. The mechanism is a very straightforward approach with goal-based, time-bound, and structured mentoring. Enrich yourself connecting to 400 plus mentors from various fields of work and make a difference. As we begin, I'm so pleased to be with you and to have the chance to introduce our speaker, Anjana Vivek. She is the Director of Venture Bean Consulting, guest faculty at IIM, is a fellow member of the Institute of Chartered Accountants of India, ICAI, with over 30 years work experience. Other positions held by her include COO at NSRCEL, IIMB and Vice President, Ernst & Young, heading their due diligence practice for South India. Her areas of expertise are business planning for high growth, entrepreneurship, valuation, venture capital, leadership, and mentoring. She is a sought-out international speaker and teacher. She is also an author of 3 books. Anjana is venture advisor at Unitas Seed Fund, charter member at TIE Bangalore, and invitee to the TIE governing body, executive committee member and mentor at JGI Ventures and Jain University Incubation Center. She has held positions in committees of IIMB, ICAI, and FTCCI, among others, over the last few years. VentureBean Consulting, founded by Anjana with 2 others, achieved a major milestone in 2016 with over 130 clients across industries and geographies within and outside India. The company has unique offerings for startups and early stage ventures. As we begin, request participants to mute audio appliances. After the presentation, we would have a discussion session for around 20 minutes where Anjana would answer your questions. So please send me relevant questions over chat, which would be answered at the end of the session. I would love to hear your feedback on today's session. Your input and suggestions for future sessions are invaluable to me. So please leave your feedback on the poll at the end of the session. Without further ado, please join me in welcoming Anjana. Over to you, Anjana.
Thank you, Sulakshana. Good afternoon, everybody. It's a pleasure indeed to be here and speak in this webinar. And, as has been mentioned, I work in the area of startups and I teach quite a bit. So this is my area of great interest, and it's indeed a pleasure to connect with you all and also look to hearing some of your queries and seeing if we can find answers for them. The topic for the day today, as you know, is about building a sustainable funding strategy, right? And that has become so critical in today's environment, as we have seen. So many startups have built businesses and they have been shutting also, despite reaching great revenues and getting millions of dollars from the so-called elite venture capital companies, right? So what went wrong? Why did they not keep sustainable? So sustainability has many connotations. It's about being green from a larger perspective, but it's also being sustainable as a business. So there's no point if you create a business and get funding and then you close up shop. And as per research, 90% of startups don't last beyond 3 to 5 years. So what can you do to make sure that you are sustainable and you last beyond the 3 to 5 years, right? So that's one of the key critical things which we're going to look at when we are talking about a sustainable funding strategy. So broadly, my agenda is going to be about this. What do you need to build as a foundation? Because as you know, any building is built on a foundation. If the foundation is stable, then it can take many floors. So if you build your business properly in the beginning, taking time, more than time, taking thought, or putting thought to it, right? That's the critical piece, and everything else follows. So I'm going to talk a little bit about that, then about strategic planning in terms of finance. How do you actually do forecasting when everything is so uncertain, right? Nobody knows what's going to happen next. Suddenly a client, retainer, you lose it, right? Somebody who's paying you a big amount for a project says, we are not getting money, we're not going to pay the rest of it, and close the project. So what do you do in such situations? How do you build the forecast smartly and make sure that you're staying and your plan A, B, C? And then of course it's about valuation and value creation. I'm just going to touch very briefly on those because we have only some amount of time. But it's important not to lose focus of the larger piece, which is valuation, when you're building the basic financial sustainability. So this is broadly what I'm going to talk about. So when you start, right? So I'd like you all, if you have a piece of paper or somewhere, you can note down on your, in a digital manner or anywhere. Just take a minute to think about your dream, because it's very important to understand what is your dream, what is it you're reaching out to, because that makes all the difference. Some people think of building a 1 crore business or a cash flow business, and some people think of building a 1,000 crore business. Some people dream of going global. So at some point, I know we don't have too much time now to get into all this, but some of these are questions which you need to articulate to yourself, and this is not an answer you will get at one time. And this is the base. This is the starting piece, right? So what are you dreaming? Where do you want to go, right? And what is your motivation? So some people want to become famous, some people want money, some people want to make an impact, and some people are just saying it's a substitute for my income from salary. So it's good to get these two questions out of the way, and then you should come back to it. As an entrepreneur, you need to really think about why you're doing this, right? Then the next piece, saying, where are you today? Is it a starting idea stage, or is it 2 years down the line where you thought you'd get some income and some product and you achieved it or not achieved it, right? So look at your direction in 3 years, in 3 time horizons. So one would be, say, the medium term. So usually, the planning happens in medium term, right? Most of you, if you're making a pitch to an investor, the investor would ask you for maybe a 3 to 5 year pitch. Of course, there are some investors in some domains who ask you for a 1 year projection, right? But broadly, you don't think in 1 year only, you think of 3 to 5 years. But what I'm trying to tell you is the smart guys don't think of just a 3 year horizon. They think of, the survival in the 1 year, the 3 year guesstimate, and the long term, which is the dream. And the short term keeps changing. So for example, if you projected something for this financial year where you're saying, I must earn, I'm just putting a number. Let's say I'm going to earn 50 lakhs in this year, right? Assuming you're at that stage of business. Now, if you suddenly find today that 5 lakhs out of the 50 lakhs you projected, 5 to 10 lakhs doesn't look like it's coming, then your short-term projection changes quickly from 50 to 40 lakhs. And so if your income changes to 40 lakhs, then accordingly your expense will also have to change. So that is where the short-term planning connection to sustainability comes. It is very immediate, it's week to week, month to month, quarter to quarter, and we use the phrase called a rolling plan. So what is a rolling plan? It's exactly what I told you. You keep changing this, and re-looking at your plan. So for example, let us say you had projected something for this financial year, say from April to next March. Now we're in June. So if you find that what you projected for April was, say, 10 lakhs and May was 10 lakhs, but you've not achieved 10 lakhs, you've achieved 20 lakhs in the 2 months, but you've achieved, say, 15 lakhs, or you may have achieved 25 lakhs, it could be either ways. So what happens to the next 10 months? Now you don't want to keep that same limit of 50 lakhs as your revenue target. You need to change it. So whether you reduce it to 40 lakhs or you reduce it to, or you increase it to 60 lakhs, it's a very current rolling plan. And what you would do is, there for your 12 months, instead of 50 lakhs, for your April and May, you would reset the number. So your 20 lakhs for the 2 months would instead be maybe 18 lakhs or whatever number it is, right? So you will have the actual number till April, for April and May. And from May onwards, it would be reset to a new projection, which would be more realistic because you're closer to this based on the actual for the last 2 months. So this is how you build a plan when the market is uncertain, when things get dynamic. So these are tools to kind of deal with volatility and uncertainty in the environment. And it depends again on your line of business. You may not want to do it on a weekly or monthly basis, but somebody in retail even does a cash flow on a daily basis, right? So somebody who has a store will actually count the cash at the end of the day and say, okay, this is the money I have today, and so this is what I can spend tomorrow out of my cash, right? Which is your unplanned expense or something which is depending on your collection. So you may up or down your expense based on your actual number. So the short term is for the year, broken up into a time frame and time horizon depending on your line of business, which could be daily, if there's daily cash collection, etc. It could be weekly, it could be monthly, it could be quarterly, right? So ideally, we look at a minimum of every month. So some projection don't, get put off by this planning, get very, detailed. And the other concern which many startups have and many entrepreneurs have is, I don't understand my financial projection. Excuse me. And I'm projecting 10 lakhs, but I don't even know whether it's going to be 5 or 15. Now, you just put a number saying 10 lakhs. Now, the 10 lakhs is not going to be 100 lakhs. So at least you have a range. So you project a range, say between 5 and 15 lakhs, and you have 3 projections. So 5 would be the pessimistic one, 10 would be the expected, excuse me, and 15 would be the really, optimistic plan, right? So when you do this for 2-3 months and you look back, let's say on the quarters, let's say you look back in July, on April, May, June of this year, you will have a very good sense of what you could predict, what you could not predict, and then you put 2-3 reasons for saying, this is why I did better than I expected or worse than I expected, and these are the 2-3 key areas which I need to work on. So this kind of short-term planning really helps you build something sustainable, and that gets put into your funding strategy. Now, 3 to 5 years is the next one, which is like a guesstimate. So if you're saying 50 lakhs today, you just say, okay, I want to grow 5 times or 2 times. Then you just put a number, but then you have to look at it backwards and say, okay, I want my 50 lakhs to become, say, 3 crores. So to get to 3 crores, I need 50 people, I need 10 people, I need so much of money put into assets, right? And so much of equipment, so many offices set up, so many marketing and sales teams. So you start breaking that up into a very operational plan, okay? And then you start putting the numbers and see if there's a match. Now, if you find if there's a match for 3 crores, you are saying that you're actually going to spend 5 crores, then you may wonder whether, okay, is the 5 crore which I'm going to invest going to actually make it not from 3 crores, but in maybe say 7-8 years, take me to a really much larger company. So is this investment which I'm going to make going to pay off? So that's how you start thinking when it's a medium-term plan. Then subsequently, of course, it's your long dream, right? So the long-term dream, we're talking of 10-15 years, but it is like the unicorns, the Flipkarts and others, right, who set up Ola in India. And some of them, of course, are doing well, and some of them have, some of these companies have really burnt along the way. So there are, of course, other aspects there which I don't want to get into now, such as, ownership and the stake which they have, which is less than 10%, and investors hold a large amount. So really, it's a very different story. But you need to think through, and this thought process is not something which comes to you overnight in one day. Okay, when you're building a plan and business planning, right, which is about sustainability, is about growth, is something you should spend some time over. And this is something which is driven by what you want to do. So there are, typically we talk of 3 types of entrepreneurs. So there's one who's looking at it as a lifestyle, right, as a substitute from getting a salary, being one's own boss. There's somebody who's looking at it as a serial entrepreneur, right? We have Meena Ganesh, we have Ravi Gurraj, etc. Well-known names in the Bangalore circles of entrepreneurship, and India circles too. They've started their business and sold it, again started a business, sold it, etc., etc. So they keep doing this. They keep turning around businesses. It's like a almost like a formula that they have. The industry may be different, but the methodology they have and their reputation, right, precedes them. The third kind of entrepreneur is the one who wants to take it IPO, right? So the serial entrepreneur looks at an exit through an M&A. So you look for a partner who will buy you out. The third entrepreneur builds for saying, it is for me, next generation, like the Infosys, the Wipros, right, and the earlier Tatas and Birlas, they build businesses for life, right, for next generations. So really, part of your long-term plan, when you talk of it, is about thinking through what do you want to do, why are you in business, right? So everything is connected, and that's the starting point. And many people talk of finance as standalone. Finance is just one angle. It is like, as a human being, you cannot say my diet is just separate from my exercise. Okay, my work is separate from my health. Everything is integrated, right? The work impacts your health. So similarly, in business, there are multiple elements. Finance is one piece. Then there is the laws and regulations. So I talk of these three pieces, these three pillars which you must look at, right? One is about saying the legal framework, the tax, etc., those aspects. The other is about saying your financial piece, right? How must I, be sustainable? And then there is one piece which is, the valuation piece, right? Which is sometimes not linked to the finance of today. So these are the 2-3 angles which you must think from, and not think of finance and forecast as a standalone. So again, coming back to what I was talking about, saying there is a growth plan which you're thinking of, there's a financial plan. So you need to actually set out what you want to do. Your idea, which I talked about in the earlier slide, of saying, right, I want to be the largest business in this state, in this domain, right? Or I want to create a new business. So what do you mean by that, largest? Does it mean in terms of number of people you're employing? Does it mean in terms of revenue? Does it mean in terms of offices, right? So what do you mean? You have to actually put it in terms of numbers. And if you're an entrepreneur, this is the language of business. So you need to make sure that you understand financial statements, and either online taking a course, or understanding, with some material, or going for some classes. It's very important that you understand finance, because that is the way in which we speak in business. Let us say, now we're having this webinar, okay? I'm speaking in English, so most of you understand me because I'm speaking in English. Now, if I started speaking in my mother tongue, there may be a handful of you who would understand me, okay? And so I will not be able to communicate to you, though I have this much knowledge. And so it's the same in business. For you to understand others and link them to your business, and for others to understand you, it has to be in financial terms. And if you're an entrepreneur, you should not avoid this. Yeah? So get familiar. Just a summary, we talked of short term, typically 1 year, month-wise, with fewer assumptions, because you have some data and points with you. Medium term is estimates and guesstimates and trends. And long term is typically saying, I want to be a 50 crore company, I want to be a 500 crore company, etc. And smart entrepreneurs keep flipping between each of these. And flipping does not mean on a daily basis, but at least once in a month, once in a quarter. Look at all these three. And again, depending on your stage of business and your line of business, right? If there's a major change which has happened, you need to revisit some of these. Otherwise, a quarterly day set out in a quarter, just look at your numbers and see where you're going against what you planned is very important. And since we are talking about sustainability, take these two separately. Survival is even more than, it's even more critical, right? How do you survive? So in the short term, if you're saying that, you don't have cash, right? How do you last out for the next 3 to 6 months? So that is putting down your numbers. And I'm sure many of you as entrepreneurs in Bootstrap, I have done that. I am an entrepreneur. I remember, planning, putting aside some money and cash flow for saying the next 6 months, even if I don't get zero income, I'm going to survive in the next 6 months, because this is the money which I put aside, and I put it aside in fixed deposits, which I could draw upon, right? And which means not just your official work. So it had to pay for some office expenses, plus I had to take care of some home expenses. So, if you put aside saying you need to spend 50,000 a month, I'm just throwing some numbers, right? 50 seems to be the easy number today, which comes to me, right? 50 lakhs, 5,005. So if you're saying 50,000 is my expenditure for the month, out of which 20,000 is for my office, and 30,000, which includes some fees, and it includes some, rental or EMI. So make sure that you have 50,000 in the bank for the next 6 months, and maybe some surplus, right? So that is something which you should do, depending again on your stage of business, assuming zero income, right? That is at the very, very early stage. Supposing you have some comfort level and you know you're going to get your 20 lakhs this year, definitely, then you make 20 lakhs as your minimum worst case scenario. That is your survival bootstrap model. And so this is how you look at it. And I'd like you to think of 4 items which are very, very critical. So when you're doing your planning, make sure you spend time thinking of these 4 elements: your revenue, your profits, right? And today profit is no longer a dirty word. I remember 2 years back when I used to talk of profits, people used to turn around and look at me and say, you know, you're old fashioned. Yeah, profits can never be old fashioned. At some point you have to hit profits. And if you look at the top tech companies in the world, right, you look which are the top few tech companies, just see if you remember it. Take a few seconds to think of which are the top companies, and you must be working with some of them. In the last few days you would have worked with some of them. So it's Google, it's Amazon, it's Microsoft, right? It's Apple, which is the other one? I'll leave it to you, right? So the big one, the billion, it's supposed to be the billion population, right? There are billion populations in addition to India and China. These are the other 2 billion populations which people talk of. One is the Facebook billion, and the other is the women as billions, right? As targets to talk about. But you know, so they all are making money. So please don't forget that they're all making money. And you know, the ones who don't believe in profit do turn around and say, yeah, but they're making profit now. They didn't make profit for 10 years. So yes, but that's today. Today we're talking of profits because many more companies have lost. But how many more companies have lost because they were not profitable? And 15 years ago, 20 years ago, in the US ecosystem, it was fine. But in India's ecosystem today, is it fine? Not really, right? So how do you then get the money? So that is very important. Please start thinking about how you will make money, right? And is it going to come today, your profitability, or is it coming after 5 years or 3 years? I'm not talking about an investor presentation, investor pitch. That's a separate matter because today I'm not talking about investors. I'm talking about you as a business. How do you survive? How do you make sure that you last, right? So please focus on revenue. Please look at profitability. The profitability is connected to how much money you're burning, cash burn. And what is that cash burning? No, it's like your Diwali crackers. You burn all those crackers. You create a lot of pollution in the environment and you don't get any money back, right? You only have the negative pollution, which is really a concern for all. So the same thing, some cash burn may be good, but a lot of cash burn maybe just because it's fashionable to do. For example, you know, paying for a lot of PR when you don't have a product, right? So I was just reading an HBR article, you know, Harvard Business Review article where they're saying, you know, don't overspend on the PR if your product doesn't match, because later you'll get into problem. So focusing on things which are not right when you're in survival or sustainability stage, looking at something which matches a company maybe 2 years from today, those are problems you need to address. So look at your cash burn, and also how do you look at your value? Because valuation, we've seen valuation hit crazy heights, right? We were talking about the Flipkarts and Olas a little while back. So some of them, the valuations have dropped dramatically, right? 30, 40, 60%. Some of them have gone to even 5 to 10%, some of them zero value. People are not even willing to look at the company. So there's a cost to closing the company rather than looking at value. So value, I will talk about a little later, but just to sensitize you to a couple of these things. Not all value is really true value. Okay, value is something at a point in time, and sometimes the value is also due to wrong types of approaches. So there are vested interests pushing up value, right? So don't just assume that somebody getting a great value, everything is clean and transparent. So some of these are also due to other reasons, and we see that, right? So many companies are being accused of fraud. It's a little bit of a concern, and I think as entrepreneurs who are building the next businesses in India, you need to be sensitive to that. What is your reputation, right? And there has been a recent IBM study which has said a lot of Indian entrepreneurship is failure is because of misappropriation, which is a concern, right? We're looking at addressing corruption, so it starts with us individually as businesses. So when you're looking at revenue, profits, cash, and value, please look at building a ethical, sustainable business in the good way, not just criticizing about other businesses who are built with in the wrong way. So then coming to the other aspect of funding, the other two critical aspects, saying how will I get money, how will I use money. So it could be flipped, the equation could be flipped. Okay, you could start saying I want to use the money like this, and then saying okay, I need 20 lakhs, and so then saying where will I get the 20 lakhs from. So I'll tell you a real life situation, because yeah, as I'm a guest faculty at IMB, and I used to be a full-time faculty at IIM Bangalore some time ago, and I used to teach business planning and financial planning. So one of the students in my Women Entrepreneurs program, she actually had a budget. She wanted to start off, and she had said she had a budget of 25 lakhs set aside. And so when we planned, we said, let's not put 25 lakhs aside. We'll create a starting utilization of 15 lakhs, and then the 10 lakhs is the buffer to take you for the next 6 months till you start earning revenue. So she was in a line of business which could get revenue quickly. So the 15 lakhs, when she initially projected whatever she wanted, she put a wish list. And this was the time the nano car was coming out. So when she put the whole list, she said, I want a nano, I want these items, I want this kind of software, etc., etc. And the whole budget came to more than 20 lakhs. So then she pruned some items, but she said, no, I must have the nano car. Right? So this was something, before it had come out, it was really held in a very high esteem at that point. So this is the planning as an entrepreneur. It is not something somebody pushes. Unlike in a corporate environment, here you have a choice. So be careful about how you use your choice, right? And so the source of funding and uses of funding becomes another critical element when you're planning and looking at your sustainability. So just some quick points, and some of these slides I've been spending a lot of time on, and this is what I typically do. A lot of my slides are not meant for session reading, but they're more like reference notes which you can use anytime. And I have about more than 25 presentations, and a detailed note on valuation which you can access on my SlideShare page. They're freely downloadable and for reading, and including there's a 1-hour video also on valuation, etc. So there's a lot of material. Like I said, I'm a teacher, I'm an entrepreneur, so I have a lot of my teaching material which has been around for some years now. When I started teaching, there was no content for the Indian context, and we didn't have NENs around, right? So a lot of this content is available to you. So I'm going to flip through some of my slides, and you can refer to it later. Just like I have asked you to flip, back and forth between time zones, as you can see, your short term, medium term, long term, like I told you. And the last point is critical: looking for your patterns, for your consistency, for your thought process, right? So what I would like you to ideally do is, since this year has started, if you have not projected for this financial year, if you've not started a business, just start putting some numbers and saying, hypothetically, if you're going to say you're going to start in September, right, from September to March. So just put those numbers down in terms of your revenues, in terms of your expenditure, and those 4 items which I talked about. Maybe valuation it's too early to talk about it, right? So if you have been in a business, just look at your last year. If you had your last year business, look at April, look at May, put those numbers down and see what you had projected. If you've not done any projections, put some projections for the next few months. Go back to it at the end of June, go back to it at the end of July, and look at the difference, right? So start that thought process now and look for your patterns, because your actions and your numbers speak. Yeah? And smart guys look at that. In fact, Nandan Nilekani had spoken about it, I think, in the 2006 annual report of Infosys. So he said, in the short term, we look at a rolling plan, which is what I told you, right? And if some of you are interested, I have some of these rolling plan formats, right? I'm happy to share. You need to just drop in a mail to maybe through NEN on Wadhwani Foundation or directly. So a lot of this teaching content is available. So that's, Nandan talked about his rolling plan. Then he talked about his midterm plan, right, the forecast, and then he actually talked about the dream. He says 15 years, 10 years, nobody knows what's going to happen in the future, right? And at that time, you know how it was, how well Infosys grew in those times, in the early days, right? And it's not that everybody grew. People think, say that it was easy. I have seen enough companies in Bangalore city who come and said, we were like Infosys that time. Today they don't talk like that, but this was 15 years ago. They all say they could have been another Infosys, but Infosys got lucky. It's not about lucky. It's about this planning. And Narayan Murthy was still in the news, right? He had apparently he looked at several spreadsheets when the number of working hours were changed. Because I know somebody who worked with him in the strategic department actually said that he looked at about 20 to 25 spreadsheets just because the number of working hours had changed. And so this is the kind of detailing when you're looking at not just growth, but also sustainability. So this is what I've talked about. Periodically compare your projections and actuals. Try to see where the difference is. Is it because of some errors or due to ecosystem? What is it, right? And the final piece is update the projections to reflect your reality. So this slide is just a summary of what I was talking about. Then we talk about the methodology, right? When you have so much of uncertainty, how do you actually manage to project? So we talk of a couple of tools. Okay, there is something called a sensitivity analysis, and there is something called a scenario analysis. So the scenario analysis is what I've put down here. You talk of pessimistic, realistic, and optimistic. Then in terms of money, right, capital investment, you talk of bootstrapped and with money. So this is the way you actually deal with uncertainty. Let's say you're targeting an investor, you expect 1 crore funding, and you expect that it will come in July. So build two plans. You don't have to get into too much detail, but just on a simple Excel with some few revenue numbers and assumptions saying, if you get the 1 crore and if you expect it in July, by the time it comes into your bank and you've signed the papers, it may be even August. So you say you start spending it in August. So you put that out there and say, okay, if I get 1 crore, by the time I spend it by December, this is how I'm going to spend it, and that's the plan. That's the revenue I'll get. The other way is to look at saying, I don't get the money and then I manage with what I have. So these are the two scenarios you build, right? And other alternate business models could be saying, okay, if I am changing my business model, for example, let us say you don't, you have a store, right? And this is what the Future Group actually did at one point of time when the markets, real estate markets, rentals were dropping. So they went back to the landlords in the malls and negotiated with them, saying that, you know what, we don't want to pay so much rent every month. Instead, we'll pay you a small amount, which is fixed, and we will link up the revenue with the sales. So this is a strategic change in the business model, where what happens is, so instead of paying 100 rupees rent, you may say I'll pay 20 rupees rent, and the rest 80 rupees may come from my sales. 5% of my sales, or 10%, or 2% of my sales will come to you as landlord. And so the landlord, instead of making 100 rupees, or instead of losing the customer, so the landlord has half empty space, let's say in the mall, they are at least getting 20 rupees, and there's a potential, right? There's an option. So the option is very valuable to the landlord, that they can make maybe 200 rupees rather than 100 with a guarantee of 20 rupees. Otherwise, the 20 rupees is also lost. So some of these, you have to work out the scenario and go to the people concerned, right? Your employees. You may tell your employees also, I don't want to give you 100 rupees as salary. Instead, I'll give you 50 rupees. And, if sales come, maybe we will make it more, right? That's happening in a certain way. And I know of somebody who talked about even paying, this was in the US, and in a startup, when they had these pujari fees, right? As many Indians are fond of doing, the initial puja. So the pujari was paid in stock in the company, right? And this was in the heydays of Silicon Valley. So there are different ways when your cash is limited, right? But be careful, because like I said, some of these big companies, if you looked at even Flipkart and Ola, the founders have very limited stake. Now with that kind of stake, will you call them founders? And they may be founders of the company, but are they the key entrepreneurs driving the business? Maybe, maybe not, right? Maybe it's the investors driving it. So then they become more like an employee with a glorified stock option, right? Who's tied into the company. and not a decision maker, because the decision makers are the investors and the other people on the board who are sitting outside. And so there is a price you have to pay for giving away too much of stake and wanting too much money if you don't command the valuation you want. So these are some of the things when you look at business models. I gave you one on the rental. And the advantage of this, right? Maybe you can think of it. What is the advantage? And the first cut is usually what people say is, okay, I save cash flow, right? I don't have to spend 100 rupees. Only if I make 500 or 1000 rupees from sales, then I will have to give away a little bit of money. So my cash, I don't have to borrow and get into a loan, or if I don't get equity. So that's one way. That's a very basic thing. But the larger picture is, strategically, the mall owner or the landlord becomes your partner. They are actually selling for you because they are also interested in sales. So this is a smart way. When we talk of business models, it is not just a financial planning model. Though I've titled this strategic financial planning, it goes far beyond finance. And this is how, as entrepreneurs, you have to be smart. You need to think out of the box and see what is it you can do to get money in or reduce the money out and keep the long-term impact. So this is where you're planning in the 3 horizons. In the short term, if you do this, it may be wonderful, right? Some of these, for example, like I said, giving away equity. If you give away equity to somebody and say, I don't have 50 rupees cash to give you, I'll instead give you so much of stake. The 5% stake may be great today, but tomorrow that same person can turn around and with the 5% really become a barrier. And when you're trying to get equity, they will try to say, give me 1 crore for my 5%. These are scenarios which have played out. They say, just because the investor, let's say a company has come in from overseas and says, we want to buy out 100% of your business, and this 5% is sticky. And this man says, for my 5%, instead of giving me 50 lakhs, give me 1 crore. Right? And you are at their mercy because you want to close the deal. So be very careful when you're doing all these things. Sit with your legal help, sit with your chartered accountants, because there's a cash flow and tax issue in addition to the business and valuation issue. So when we talk of building a sustainable funding strategy, it is these 3 elements, right? Now, very quickly to sum up, I think I have about 4-5 minutes left before I throw it open for questions. So your forecast is built on your business model, as we talked about business model and strategy. And the thing is, it is not static. You keep looking at the past and refining and redoing your business model based on today's business environment. These are the 3 financial statements you must look at. There's a balance sheet, there's a profit and loss account, there's a cash flow statement, and please take time to learn the basics. These are 2 caselets where the entrepreneurs did not track finance, and so their sustainability got hit. And so I will leave these 2 for you to read. Now we're coming to look at the kinds of revenue stream, these critical elements in your financial forecast, right? Where are you getting money from? How are you getting money? Is it as a percentage? Is it as a one-time cost? Is it a retainer, right? Is it based on some IP? Then your capital expenditure is there, which is your assets. And similarly, your other revenue expenditure, which is your salary, etc. So I've just broadly broken it up into 3 buckets for you. Now, you could convert capital into revenue and vice versa, just like I gave you an example of a landlord's salary being paid as a. So then what will happen there is your revenue stream, it will become minus. So instead of getting 1,000 rupees, you may get, say, a 900 rupees or a 950 rupees. So it hits the revenue. Whereas if it's rent, it will hit the expenditure, right? It will come in the last point. So the way you change your business model impacts the way you have your financials. Capital expenditure is very simple. If you buy, let us say, a laptop, you may buy it on EMI. So instead of spending, say, 50,000 one time, you may actually end up, maybe through a credit card or a small loan, you may end up paying 6,000 a month for 10 months, right? So then your capital one-time big cost, instead of 50,000, works out to 6,000 a month. So that these are some things you need to think about when you're looking at sustainability. So points which you need to think about, again, over the time horizons, what is the money you require at different points? What is the constraint you have today? And valuations. And this is, again, summarizing. Uncertainty is taken through scenario and sensitivity. So when I talked about scenario earlier, I didn't talk about sensitivity. Sensitivity is understanding what your business is sensitive to. Okay, again, it's just very simple English. I'm not using any complicated terms, right? I'm not throwing any big terms at you. What is sensitive? So let us say the airlines industry. What is it sensitive to? The fuel rate, right? Now in the GST scenario, all of us in India are not sure now what are the rates going to be. They are sensitive to a new GST tax rate and the complications. In a business, in the technology business, 30-40% is salary cost. Now the salary cost in the industry is going up by 20% every year. You will also have to match that. So you're sensitive to salary costs. So pick up one or two critical elements which you're sensitive to. You don't need to pick up everything, but you need to understand how your forecast will change based on this, right? So again, I've listed some key elements, and finally, I will just close up very quickly with talking about building and creating value. So some of these are intangible, which are not captured in finance, like saying so-and-so is your advisor, right? For example, when Ratan Tata invests in a company, when Narayan Murthy invests in a company, everybody sits up. Now, whether people appreciate them or not, right? Whether they think they are worth emulating or not, there are multiple views. But the fact that a Ratan Tata or a Narayan Murthy has invested in a company makes everybody sit up and say, oh, this company, there must be something for these people to have invested, right? So automatically the value is created. So similarly, associating with well-known people should lead to value creation. Understand your aspects of business and what is it which is building your brand as something which people aspire to be a part of and to be associated with. And so there is something based on alliance, and then valuation, very quickly, it is based on multiple things. There is tangible and intangible. Like I talked to you just now, if somebody well-known is a part of the company, immediately there's a perception that it's valuable. Data, there's assumptions, there's subjectivity, etc. And we have multiple ways. And like I said, those of you who are interested, I do have some, and I think they're easily readable notes because that's the feedback I get. Okay, my evaluation sessions are most popular. So you can take a look at them, and any details are in that. So how do you actually get into these valuations? And don't forget the tax implications and the statutory and other aspects. So again, valuation is driven by markets. 2 years ago, everything was getting into unicorn scenario in the e-commerce space, right? It is driven by percentage. I talked about that. It is driven by negotiation. Okay, I will tell you an interesting story. It's not just a story, it's a true story. Yeah, so there was this, again, a woman in my Women Entrepreneurs program where I had taught valuation and negotiation, and she sat in my workshop on a Friday. On a Saturday, she was sitting in a family business negotiation where her father was saying, this unit has to be sold for X crores. And since she'd just done this piece, he said, okay, you lead the negotiation. And she actually got 2x crores. So there has been a live case of just having negotiated well by knowing, it's not about value necessarily, it's about how you communicate and how you negotiate, right? And I have given you the link about from where the valuation can be found. And so, yeah, these are links about where you can take items from. And with that, I think I'm just more or less on time, where Sulakshana may want to open it up for Q&A.
Sure, Anjana.
Yeah.
So I would request the participants to send me relevant questions over chat, which Anjana would pick up and interact very directly with you. So please do not hesitate and send across. So in the meantime, I'm going to launch the poll, and you can just share your opinion about the webinar through the poll to help us understand how effective the webinar has been for all the participants who are here with us. Anjana, I have received 2 questions so far. One is from Bharat from Apple Inc. He asks, is convertible loan a good option for an early revenue stage enterprise B2B SaaS business when the evolution is not clear?
Okay, so what I would suggest, so you've said B2B business, SaaS revenue.
Yes. Yeah.
When the revenue is not clear. Okay, so if you're taking a loan, there are two aspects you must keep in mind. One is your ability to repay the loan, okay, the principal as well as the interest, right? So first look at the loan amount and see your scenario. I was talking about the scenarios of worst case and best case. So project and see, in the worst case, do I have a cover for my loan? So if I have to pay back 50,000, how much am I going to earn in my worst case? Is it 1 lakh or 2 lakhs? And what's the risk? So there is no right answer. The point I'm trying to make is it's a call you take as an entrepreneur, saying you want to take that risk, right? And so you're willing. So you know that if you don't make that revenue and you have to repay the loan, then maybe you'll have to close the business, right? So that is one way of looking at it. The other is when you're, that is one aspect from a payment point of view. The second aspect is from a convertible point of view, saying this is my convertible, what is it going to convert to? Am I going to give away 20% of my equity in my worst case, right? So if your worst case, you're not able to repay the loan and they end up taking 20 or 30%, and or if it's 2%, it's a different scenario. So get into the details, look at the scenarios, and this is what I was talking about, worst case, best case scenario. So look at the scenario with a view, you're sensitive now to the loan and convertibility. So put the revenue scenario optimistic to pessimistic, put the loan convertible scenario in these situations and see what is the risk and do you have the appetite for the risk, right? I'll give you a quick example. This was in fact a very senior entrepreneur who actually was in one of my classes. He said he had a situation where he had a lot of money. He had a few $1 million as venture capital money. And in spite of that, he had to take a bank loan. And he said he will not pledge his personal house. Whereas there are entrepreneurs, we know in India, they have pledged the family jewels, right? We know India is famous for such stories. There are entrepreneurial business houses where the jewelry from the family is pledged. But this man, he came, he was IIT Chennai, IIM Ahmedabad, funded guy. And of course, he did very well later. But at that point, he said, my house is available for my family, my kids, my wife, my parents. So I cannot take away that security. So it's a question of risk appetite which you have individually. And this is very important. There is no right answer. Yeah, and you cannot look back later saying, this thing. So one is ethically look at it, right? Not some of the NPAs which have happened today in the banks is because of fraudulent thinking. So I'm assuming that's not anybody's intent. Okay. I hope that answer helps.
Sure, Anjana. There is one question coming from Muthu Alagappan. He asks, at what stage is it right for a startup to approach for funding? What are the main attributes in a company that an angel investor or VC looks when considering a funding proposal?
Okay. So couple of critical things. There is an ecosystem of investors. Okay. The investors range from individuals to corporates, right, to HNIs. So it's very important to understand whom you're going to. So don't just go to anybody. For example, if it is someone you know, let us say there was this person who had worked in Wipro at that point, and they got funded by somebody who was a senior, person in the Wipro circles community. And so the funding was acceptable on both sides because the party knew this investor. So this was a lady getting invested in, and she was comfortable. The investor was comfortable because they trusted each other because of that ecosystem of having worked in the Wipro network, right? So it's very important to see, don't just take money blindly from someone just because it's coming. So there was somebody in the real estate who invested in a project in equity, and when the real estate market crashed, this guy wanted 2 crores back, and the entrepreneur could not give it because it was invested in the money. And also in that case, what had happened was the money had not come in the right way, right? So to return that money became impossible, and they got into a big mess. So the entrepreneur really struggled. So first, investigate and understand who your investor is. Okay, that's one critical element. The second piece is how do you make yourself ready? I gave you some hints when I talked about Flipkart and Ola, saying, everything, you're just left with 3% or 5% ownership, but, then they're getting their salaries. So each one's individual choice. So how much equity do you have to give up? How much is the valuation? Look at the long-term plan. The more important aspect is looking at your business itself from a planning stage, saying, when will you actually start making money? When will you create that value to give you multiple returns? What is your exit? So in 3 to 5 years, typically an investor looks for a 10 rupee share to become maybe 50 rupees or 100 rupees. Do you have the potential to grow as a business? Or are you just saying, I'm having a profit? The industry is showing 10% profit, I'm showing 12% profit. Not every profitable business is VC fundable. So that's not exciting for an investor. So from an investor point of view, there has to be a huge market. So for why are the Flipkarts and others getting invested into? Because we are seeing India as a huge market. Right? So does your business have that huge market? What is the total market? What is the total addressable market? Do you have the capacity as a business to address the market? Do you have the capacity as an investor? By capacity as an investor, I mean, do you have the drive? Do you have the excitement? Do you want to do it? Or are you laid back and saying, doesn't matter. Even if I get 50 rupees, it doesn't matter. I'm not going to chase 500 rupees because it stresses me out. I'm happy. I'm having a wonderful life with this 50 rupees. Why should I chase 500? So they will try and check if you really have that drive. Are you aggressive? Are you having the potential? So those are some of the things investors will look for. And of course, today it's about profitability. And so as a business, to actually make sure that you are worthy of investment, please look at how do you create value for yourself first, in terms of saying, have I started getting revenue traction? Have I got a pipeline of customers? Right? Those become very critical. And before that, try to avoid going out. Of course, there is no general answer. Like there are hundreds of investors, there are different types of business. Maybe your business needs an investor today. Maybe it does not need an investor today. So I will have to look at the specifics to get into more detail. These are the broad points. To summarize, big market, but most important is the person. Is the person trustworthy? Is the person capable? And person or persons, it's not a one-person show, it's a team. Right? So these are the two critical elements.
Next question comes from Shashidhar Suyan. He asks, what is the outlook on funding for EdTech based out of India? What is the global scenario?
No, can you just repeat it? Funding for?
Funding for EdTech, EdTech.
EduTech, okay.
Yeah.
Education.
Based out of India. What is the global scenario?
Okay, so I think there has been a very recent study by Google and if I think KPMG. Even today's paper, Mint today had referred to it. Just go to Live Mint and check out. There was a reference to this KPMG Google article on EdTech. Okay, it's very recent, few days old, because I work with a company in the EdTech artificial intelligence space, so I'm following it very closely. There is appetite. It's a big market. It's a huge market. Okay, nobody has cracked it fully because it is still underserved. If you look at the population, the need for education is never going to be going out of fashion. Just like food, these are evergreen industries. Right? People always need to eat. They need clothes to wear. They need a place to stay. Of course, real estate is went out of fashion because of some other reasons. Education. So from that sense, the total addressable market is very high. But having said that, can you make money out of it? Are you in a space which is there? Because there is so much of clutter. Everybody is trying to get into education. So how do you as a business stand out in the clutter and not have a Me Too model is the second piece. The third piece is to get revenue. You need customers, right? The growth, the market is huge, but how will you get your customers? You need to convince your investors that you're capable of getting customers. And it's a little difficult in India to get the education customers. Okay, if it's the corporate, the cycles are very long. If it's the school, it's very difficult to penetrate because decision makers are across. So this is a tricky industry to get customer traction in. And finally, from the question was about India or US. Money is everywhere today, both Indian and global money. So once you get these pieces right, you need to decide your game plan, saying where do you want to go? Are you looking at sale, IPO, right? If you're looking at exit, M&A, who's your potential buyer? Is it some company based out of India, based out of US? So there are a lot of finer points you need to look at and then decide on taking the money and the way you set up your business. But yes, to summarize, it's a good space. It's a hot space. If you can figure out that you can, get discovered and stand out from the clutter, then you got something going.
Bharat Srinivasamurthy asks, are there any financial modeling spreadsheets that you can recommend that early stage entrepreneurs can use?
There are quite a few online, and specifically, I have my own customized ones which I share when I teach. If I can try and pass some of these on to NEN to pass them on to you if you want. But other than that, Google, there are a lot of freely downloadable spreadsheets and presentation templates. So I don't have specifically prepared business plan or financial forecast templates other than what I use in my teaching. I don't recommend anything because there's enough and more online. So it's actually you have a problem of plenty rather than few. And I think NEN Wadhwani Foundation also has a few templates. So you need to figure out. So there are two ways I talk about this. Go to some company in that space. For example, if you look at EdTech, you're talking about food industry. Go to a listed company in that domain. Look at their items. What are the costs? Where are the revenues coming from? What are the balance sheet items? And then that gives you a sense of what are the elements you must have, and then pick up one from the wherever, like I said, Google or NEN, or there are standard business plan templates. Just pick up something and then see if this fits, and then create your own template. I ideally ask entrepreneurs to create their own template.
There is a question from Jyoti Rao. Will the new GST rule affect small business majorly, and how? I'm having a proprietary firm currently.
Will it affect a small business?
Will it affect GST rule affect small business majorly, and how?
Okay, so Jyoti Rao. So I'm a chartered accountant. I just came out of a 3-day seminar, CA Institute seminar on GST. So the point which everybody is making today is, we are still at a thinking and design stage, right? The GST has not yet been implemented. So really the impact will be known only on 1st July, because there are multiple things which are still being fixed. There's software which has to be loaded, right? So one has to wait and see is the general consensus. On paper it looks good, but there are 2-3 issues. See, you need to file 3 returns. Everybody has to file 3 returns every month, and so that is on different dates of the month. You need to keep track of every bill. You can't have your billing at the end of a quarter. Earlier we would not create our bills. The whole accounting would be kept aside, and sometimes even once a year somebody will come and enter everything into your tally. Right? That's not possible because it has to be on a monthly basis. Every voucher and every invoice has to be entered. The other problem is that you may enter something you've purchased from somebody, but that person has to enter it as a sale. It has to be matched. Now, if that matching doesn't happen, either because there's an error in entering or the software problem is there could be an issue. So we'll have to wait and see and understand the complication. There is concern that it's complicated, but everybody is saying that the complications will be, this is the general consensus among the CA community and all also, that the complication is, people are aware of it, and the government is going to be very helpful and considerate in the initial stages so that they don't penalize people for these kind of errors. So we'll have to wait and watch. But yes, please go to a professional and get some help and understand what it is. You can't wait and say in July, oh, I hadn't done, end of July saying, oh, I did file my return, or I didn't do this. It's better to go now and talk to your professional, whoever is helping you, right? Your professional services help. Talk to them, your chartered accountant, your legal help. Ask them what it is, and then get equipped today itself so that you're ready. Because it's a big thing which is going to hit.
Jyoti says a thank you. There is one question coming from KP Ramachandran. He asks, what do VC or angels look for? Is it the revenue generation or profit of the business?
So revenue generation is the first topmost requirement, because many times the revenue, the break even and the profitability comes later. So priority is to get a huge revenue, which is why you've seen the Flipkarts and Olas and others, they get even though they are not still profitable, right? They have not broken even operationally also sometimes. They have still been getting crazy valuations. So it's clearly because of revenue in that line of business. So by saying that I'm profitable on 100 rupees, let's say you're profitable with 100 rupees versus a revenue of 1000 rupees and not profitable, the 1000 rupees not profitable, all else being similar, is a preferred option, right? But today profitability is the add-on also. People want to see the horizon and say, okay, after some years or after some months you're going to be profitable. If you keep saying only revenue without saying how you're going to become profitable. So if, for example, if you're always selling 100 rupees thing at 90 rupees at discount, right, which is what the Flipkarts were doing, everything is going at discount, then there's no way you can recover the money. Already your 100 rupees you're selling at 90 rupees, so you're on minus 10 loss. Then all the other expenses, the salaries, the rentals, the travel, all that, all the extra costs, right? Delivery costs. So how do you actually then, even after 5 years, you don't see profitability? Then it's a problem, right? So you cannot ignore or neglect profitability at some point in time, but that kicks in later. Profitability does not kick in today.
We are just would be closing the webinar. So if participants have any questions, request you to send it across very, very quickly. We are almost winding up now. I'm not seeing any more questions coming in.
Okay.
So maybe it's time to conclude this webinar on building a sustainable funding strategy. And it was a pleasure having the webinar session with Anjana. I truly appreciate the way you covered each and every topic in detail and also cleared our doubts on the same. I would like to express my appreciation to the participants on behalf of Wadhwani Foundation National Entrepreneurship Network for your dedicated participation on the webinar. We would be having another webinar series shortly and would like to bring to you another enriching experience. Wish you success in your endeavor. Thank you. If you want to reach out to Anjana, you can just write back to me in my email ID, which is already there on the webinar, and she will come back to you, or maybe I can connect you directly to her for your requirements and needs. Thank you all. Thank you, Anjana.
Thank you so much. Thank you for the participants and for being so interactive and asking questions. Yeah, thank you so much.
Thank you.